All right, looks like we are live. Yep. Yes. All right. Thank you for tuning in, wherever you are in the world. This is your host, Dhane Diesil, and today we're going to be talking about the pillars of generational wealth, 3 cash generating assets you must own. So let's dive in. Let's get to it. Okay. Before we hop into the meat and potatoes of today's message, first let's go over some fundamentals. Obviously, Robert Kiyosaki, Rich Dad, Poor Dad, more often than not, that's how most people become aware of this whole concept of financial independence and financial freedom. So the core principle of Rich Dad, Poor Dad at the end of the day is understanding how you earn your income matters. So this is the visual representation from the book, and where ultimately everyone in the world, we have 4 ways to earn income, and each way comes with living your life in a certain way, making certain plays and making certain moves. But all in all, this is it. And understanding this concept, as well as realizing the importance of which side of the quadrant to be on, all that stuff matters. And so a real quick refresher, as it says, if you're listening, obviously the cash flow quadrant is as follows. E, just imagine a plus sign, and obviously you have 4 quadrants. So in the top left, you have an employee, and an employee is someone, you have a job. Bottom left, you have S for self-employed, and that means you own a job. In the top right, you have B for business owner, which means you own a system and people work for you. And the bottom right is an I, and that stands for investor, which means money works for you. So more than likely, you're on the left side if you're watching this video, but you could be on the right as well. You're just obviously, folk, you understand the importance of making sure you keep your fundamentals sharp. But nevertheless, whichever side you're on, you're here, and you're here because obviously you want to learn, as well as you understand the importance of owning assets. And so owning assets ultimately boils down to being on the right side of the cash flow quadrant, where you are a business owner and investor. So now that we have a clear understanding of why the cash flow quadrant, before we move on, let's talk about why this matters. Because as we already know, as we said before, starting from zero, life ain't cheap, and the older you get, the more expensive it will become. So be prepared. There's only a finite amount of hours everyone has, and we're human beings, and we can only work for so long before we burn out, and just physically we won't have the energy to move any further. So being on the left side of the quadrant, where your income is earned basically based on the amount of time and effort, well, depending upon the situation, time and or effort you put into your quote unquote job, that's how much money you're going to get paid, as well as your ability to negotiate a great hourly rate. You know what I'm saying? So that's what's happening on the left hand side. But as we know, like that system, that process has its flaws, because you're human, so you can't work forever, and there may be moments where you get sick, injury. So then what? How do you produce income? So that's why Mr. Kiyosaki wrote the book, because he's all about everyone getting on the right side of the quadrant, where you own businesses and you are an investor, where you're using your cash, your capital, to buy cash generating assets. So when it comes to you breaking your family cycle of poverty right now, more than likely everyone in the family is on the left side on some shape, form, or fashion, and the majority of people being E's, employees, and you ain't gonna make it. That's not gonna cut it. And being an S, a self-employed, this is where you own a business. So think, general contractors, plumbers, people who actually have valuable trade skills. So let's just make that known right there. contractors, plumbers, professionals, doctors, lawyers, people like that. Those are, valuable skill sets, I should say. But when it comes to, finances and purely looking at it from a financial perspective, that level, that lifestyle is limited. I mean, granted, at the self-employed level, you're probably earning more money per hour, but nevertheless, you're still earning money per hour. You're still trading time for money, as opposed to trading, a system and people that you have hired to work for you to run that system to produce cash so that you can earn money just solely through cash and your money going to work for you. But obviously everyone's dream is to be on that right side, and especially when it comes to building wealth, because building wealth is all about living on the right side, being a B and being an I. Like, that's all building wealth is all about. And as you build this wealth, and obviously you're building it for a purpose, legacy, you want to be able to pass this on to your loved one. The most important thing you can give them that's better than the assets is this knowledge right here that you're learning. Like this, literally this picture, this needs to be a recurring lesson in your household. Like, you need to get this hung on a wall, put it on your refrigerator, get a big ass picture blown up of this and just put and talk about this, really talk about this. And you as that parent, start living this so your kids can see you living this, seeing what it takes to be a B, see what it takes to be an investor, and see how that really shows up in their day-to-day lifestyle, because they're gonna see E's and S's, tenfold when they go out into the real world. So give them something different, inspire them to take a different path. So, like I said, when you're passing down, your wealth, your cash generating assets, what ends up happening in most instances is you pass down the cash generating assets. Your kids really don't understand what it takes to maintain said assets, so they just spend all the money till they eventually are broke. And then the next generation has to hear about how, grandpa and grandma left this massive fortune that mom and dad and mom or dad and their siblings blew through. Now they gotta rebuild the fortune again. So in order to skip that cycle where you blow through the fortune, like, just make sure you pass down this knowledge, most importantly, along with the financial assets, so they have the cash generating assets, but also understand, what it's going to take to really maintain those and keep those in the family forever. So with that being said, let's go ahead and dive into the meat and potatoes of today's message. So obviously, the core of it all, when it comes to what do you need to be doing, the one thought that needs to be in your mind at all times is spend less than you earn and invest the difference wisely. That's it. If you could sum up, what it takes to build wealth, create wealth, get rich, and this is it, period, point blank. Spend less than you earn and invest the difference wisely. So with that being said, we'll use this as the foundation for our thoughts and move forward. So 3 cash generating asset classes. There's really 3 areas of life that most individuals, participate in to become wealthy. And that's the stock market, business ownership, and real estate. So this is the business owner and investor side of things. So for example, you can be a business owner that owns a company that buys and sells stocks for other people, broker, for example, or you can just be an individual trader where you trade stocks yourself, or what's another way of you buy stocks for you buy dividend stock, I should say. So dividend stock being stocks that you buy that pays an annual dividend. For example, AT&T right now, they're paying like $2 per share that you earn. So like I said, that's how you can get involved in the stock market as an investor. You're going to take capital that you've saved and buy shares of companies that you will plan on holding for the long term, like more than 20, 25, 30 years, that are going to pay you a dividend. And you're also going to be buying more and more shares every month, dollar cost averaging. But that's how you can, buy cash generating assets in the stock market. That's just one thing you can do in the stock market. There's tons of things you can do, but the one thing you can do is buy dividend stocks. Got a portfolio of those, then that's what you pass down to your loved ones. Next one, business ownership. Like I said, so you might own a company that buys and sells shared stocks for other people. That's called a brokerage more than likely, but that's a business opportunity. But the key is, you as the business owner, you're not what am I doing? Let me use I guess something a little bit more relatable. So contractor, we'll stick with our contractor example. So you're a general contractor or a plumber or electrician, whatever type of contractor works best for you, fire protection. But nevertheless, so you own a business. So you have two ways of looking at being a contractor. You can be a contractor that's on the left side of the quadrant, where you own a job, i.e., your plumbing business, where you have to wake up every day and go, fix toilets and clear pipes of shit, which is a very lucrative business. It's a dirty job, so of course it's going to be lucrative. Now you can do it that way, where you are the one going out to the actual places to fix the toilets, or you can have a system that you put in place that other people work for, that they go and fix the toilets for you. So you want the owner independent business, where you can still be a plumber, a master plumber at that, and more than likely you will be, and you need to be a master plumber when you first get started, because you got to get the business up and going. But before you even go get your plumber's license, in a sense, you need to really kind of think about it. Like, what's the end game? What's the ultimate goal? Like, what's the exit strategy? You want to be able to sell, scale, or own the business passively, own the trade passively, and you can do that. So it's just a matter of you understanding what it takes to do what it do. And then last but not least, real estate. So you can be a business that buys and holds income property that you then rent or lease to other people. Real estate, cash generating asset. So that's it, ladies and gentlemen. Literally, these are the three cash generating asset classes that the majority of your wealthy individuals participate in: the stock market, business ownership, and real estate. So let's talk about each one individually. So the stock market. This is, once again, think of the stock market as here's an easy way to understand the stock market. Think of the stock market as a grocery store. Every shelf, every aisle has different products. So think of the aisles as the sectors. So conglomerates, technology, basic materials, financials. Those are the different aisles. On every aisle there's shelves. So obviously on each shelf you go. So within technology, you're gonna have streaming services companies. You're gonna have SaaS companies. You're gonna have social media companies. And like you said, and then you go down the aisle and you see what's on the shelves, and then you pick a product that you like. It's just that simple. So the stock market, think of the stock market as a grocery store, where you go into the market, i.e. the NASDAQ, the S&P 500, the Dow Jones, like those are grocery stores. And when you're seeing, these the price action going up and down, and then the days gains or losses, and then the percentage gain, like all that. When you're seeing all that, don't get confused. I used to get confused. I used to be confused, but I educated myself. But it's once you educate yourself and you understand what you're seeing, you'll realize that most of what you're looking at is irrelevant. I'm not going to say irrelevant, but most of what you're looking at isn't pertinent to what you need to be doing. And so you'll be able to identify the key metrics you do want to be looking for based upon your strategy. So once again, stock market is ultimately a place where you go and buy and sell securities. Securities being things like stocks, bonds, ETFs, with the goal of achieving capital gains, where you buy it at $5 and you hold it till it becomes $20. That's capital gains. You buy it at whatever dollar, but then every year it pays a $2 dividend. That's dividends. And then interest. So the bond market, where you're lending companies money at a certain interest rate, let's just say 10% over 10 years, and then at the end of that 10-year term, they give you your money back. But over that 10-year term, you were earning interest payments. So that's how you generate cash in the stock market, through capital gains, through dividends, and through interest. And like I said, there's multiple strategies you can be engaged in to do so. So for example, swing trading, day trading, options trading, those are where you can see things like capital gains, where you're buying them at one price and they rise to another price and you sell them. It's capital gains. Long-term holds or value investing, what Warren Buffett pretty much does is where you're holding it for a long term, so you're getting capital gains and you're getting dividends. So that's like long-term holds. And then obviously same can go for bonds, where you're buying them at one point in time and you're holding it over the whole time you're holding it. You're getting an interest per year, and then at the end of the term they give you your money back. That's how you get it done, ladies and gentlemen. Within the stock market, these are some of the options that you have at your disposal. So the key here is to, one, educate yourself. Well, pick one and then educate yourself about it. So pick swing trading, for example, and then educate yourself about swing trading. Become a master at swing trading. Become very proficient at swing trading, and then start swing trading. So if you, for example, start with, decide to do swing trading, practice a paper trade first, and then boom, once you get your skills up and you get your consistency up and your profitability up on the paper trading side, then you can start using real capital. Long-term hold, identify their dividend yields and, find out how healthy the company is, and see how much cash they have, what their accounts receivable are, what their current liabilities are, what their long-term liabilities are, who's management, how long do they plan on, look at all that stuff. And then once you feel you have enough information to make a decision, and then buy it. So boom, that's the stock market. Moving right along. Business ownership. So there's really two ways to build a business, quote unquote. One way being where you, like I said before in the contractor example, the plumber, you went to school, first, you were an apprentice, or you went to school, you learned the trade, then you eventually start being a plumber. And whether you start working at a company and then you decide, I'm gonna just go get my own plumbing contractor's license, you get that. And then at that point, you have two paths. You can either be you can have an owner reliant business where you, the plumber, have to be there every day to fix the toilets, or you can be owner independent business owner where you create systems that fix toilets, repair busted pipes, and then you hire other people to work for your company and then use the systems that you've created to fix the toilets and fix the busted pipes. Now, the best thing to do is always going to be build a owner independent business. And here's the thing about owner independent business. If what I just said sounded more complex or too long to do, realize that that's how you build a truly valuable and sellable business. Because even if you don't plan to sell the business, you still want it to be built in a way to where if you did need to sell it, you could sell it, and someone else, another buyer, will see that there's value to it because you have systems and a management team in place, as opposed to you, the person. So don't fall into the self-employment trap at the end of the day. But all in all, build an owner independent company where you have strong teams and strong and solid systems. And when you do that, once again, your business becomes more valuable to the business owner. To potential business buyers. So I use this picture specifically because this is what it's supposed to be. You're supposed to, you think of yourself as the business owner, as the guy to the far left where you're just chilling with your hands behind your back. And you're looking at this puzzle that's being put together in front of you. And, you got two employees putting the pieces of the puzzle in place, and you got one employee that's showing you earlier today we did, we got this level of the puzzle done, your general manager in a sense. So, and that's really what it is. You, the business owner, then you have a operations manager or a general manager, and you got technicians that's doing the actual work, delivering the actual product. And that's really it. That's what business ownership, true business ownership, as Mr. Robert Kiyosaki talks about in Rich Dad Poor Dad, where you own the system and people work for you. That's what he's talking about. So it's your choice. But understand, if you're trying to build cash generating, if you're trying to build a strong asset column full of cash generating assets that you plan on passing down to your loved ones, then you're gonna have to build an owner independent business, not an owner reliant company. All right. So with that being said, let's move right along to the last asset class, which is real estate. So this one's pretty simple. We more than likely right now you're in a piece of you're watching this or listening to this because you're either sitting in a piece of real estate or you're driving by pieces of real estate. But real estate. So this is where obviously people rent or lease your property from you, and they pay you for it more than likely on a monthly basis. So you own a single family home, your tenant, your renter pays you a certain amount of money, $1,000 a month, to have access to that home. And then on the business side of things, you as the landlord or the investor, you're just looking at, okay, well, this property cost me $800 a month. This person's paying me $1,000 a month, so I'm net profit of $200 a month. And that's it. That's really like the basics of income property. So whether you own single family, multifamily, apartment buildings, or apartment complexes, the ultimate goal is the more doors, the better. And now, I used to be of the class to where initially I was like, yeah, owning a house is the American dream. That's what you want to do. Then I got kind of older, started getting enlightened, and then just felt that now I'll say this, owning a single family residence, straight up, where you basically are using money from your job to pay the mortgage, that's not the best way to go about it. But I used to believe and feel it was gospel that you're losing, because at the end of the day, you never really own the house. If you miss a payment, they could take it from you. But if you are being responsible and you are, you do got your ducks in a row and you're just being smart about it, then yeah, you can own a single family residence. But just make sure you try to, do your best to monetize it in some shape, form, or fashion so that it does become a true asset. So whether you operate in a home-based business, which can be, your plumbing business, for example, or you have a Airbnb. There's probably going to be something else in the future where you're renting out a room or however you're doing. Just be smart about it at the end of the day. To each his own. But the most important thing here is the more doors, the better. So if you do decide that you do want to buy single family homes, throughout your city or cities in the United States, then that's cool. But just make sure, you understand that the more doors, the better. Because now, Grant Cardone is really one of the main proponents of this, saying, it's not the best idea to buy a single family residence because it depends on you to sustain itself. But once again, if you take more of an investor's approach and you buy multiple single family residence, and you're able to make sure that your net profits are pretty profitable, or your margins, I would say, are pretty good per property, then you can afford for one to be empty at, because you obviously renovations, or, somebody moved out, you got to renovate it, then re-rent it. You can afford that if you got multiple doors. But if you got one door, two doors, and yeah, it might be very, very, very tough. And that's really the basic premise why some schools of thought say that a single family residence isn't an asset, because they're more so looking at it from the perspective of, okay, if I go down, or I my income somehow, gets lost in the sauce, then how am I going to be able to sustain this thing? Because it's not putting no money into my bank account. It's only taking money out of my bank account. But once again, as long as you just understand the basics of spend less than you earn, invest different wisely, you want to buy assets that put money in your bank account, not take money out of your bank account. All right. So with that being said, I think that wraps it up for the 3 asset classes. We talked about stock market, businesses, business ownership, and real estate. So there it is. Now you know. If you didn't know, now you know. So the lessons here, the major takeaways, like I said, spend less than you earn. That's really the premise of it all. You got to have working capital, as they say, to, do number 2, which is invest the difference wisely, but which is ultimately buying assets, not stuff. So once again, no matter what age you're watching this, if you're 18, 28, 38, 48, 68, I mean, to each his own, but now is the best time to get started, and I'll just say that, you know what I'm saying? Like, don't cry over spilt milk. I used to be guilty of this. I used to be mad. My parents, they didn't provide me with the proper guidance. But at the end of the day, it is what it is. So now that I know, I can't be upset at nobody but myself for not producing. So the same applies to you. Now you know. Now you know you need to be spending less than you earn so you can invest the difference wisely. You need to be buying assets, not stuff. So you go still have your expenses. But like we learned to start from zero, keep the expenses low in the beginning, especially until you're able to buy enough cash generating assets that produce enough income to where they cover your basic personal expenses. So that's really the most major milestone you're going to get to first. You know what I'm saying, is getting over that first hurdle. So like I said, so spend less than you earn and invest the difference wisely. Buy assets, not stuff. So once again, participate in the stock market. Participate in business ownership, where you're building owner independent business as opposed to owner reliant businesses. And in real estate. You know what I'm saying? So income property. So whether it's single family, multifamily, apartment buildings, or apartment complexes. And I didn't really clarify this, but the difference between an apartment building and an apartment complex. When you think apartment building, think of like your 5 to 20 unit or 30 unit type buildings. But when we say apartment complexes, these are the big daddies, you know what I'm saying? The ones where we got like 40, 50, 60 units, hundreds of units. Those are your complexes, you feel me? So own those things, participate in those things, in those areas of life, you know what I'm saying? And understand that everything you do has a risk to it. Waking up every day to go to your job, there's a risk involved. That's why you educate yourself so you can minimize your risk. And what do I mean by that? So if you don't know how to drive and you need to get to work, and for whatever reason you decide you go drive, if you try to drive, then that's a very risky situation, because you don't know how to drive, which means that the probability of you running into something and hitting some shit is very high. But if you educate yourself, if you learn how to drive, then you significantly minimize that risk. So the same thing applies to the stock market, to business ownership, and to real estate. You have to educate yourself to minimize your risk. Period, point blank. You gotta, read the books, watch the videos on YouTube, attend workshops, seminars, whatever. You gotta immerse yourself in that and educate yourself. Learn it. Stay down until you understand what it is you're looking at. Because I'm telling you, as someone from experience, you know what I'm saying, specifically with the stock market, like I've been wanting to invest in the stock market for years, ever since I kind of read Rich Dad Poor Dad back in the early 2000s. But, I wasn't educating myself. So I just, in my mind, I was telling myself, nah, that's too risky. That's too risky. That's too risky. As opposed to like, all right, well, educate yourself so you understand what it is you're doing and what you're looking at so you can minimize the risk. And it's just that simple. So ultimately, all in all, when it comes to buying cash generating assets, the ultimate focus is on increasing your net worth. Net worth being your assets minus your liabilities. That's really the gist. So once the income from your assets exceeds your expenses, you've achieved financial independence. But no, there's another level to go. And we'll talk about that next level in the next video. I learned this next concept from a real good show that I'll be watching on YouTube, and I'll definitely include the link to it in the next video, or when I make that video. But yeah, we're gonna talk about the 5 levels of wealth. So with that being said, it's been a pleasure as always. Make sure you follow us on Instagram at BBWCN and on Twitter as well. And if you're on Facebook, just search for Billionaire Belief. Make sure you spread the wealth. Share this with family, friends, foes. You feel me? Like, it's going to take all of us to make any one of us successful. So let's spread that wealth. Make sure we all empowered with the proper information to prosper. And most importantly, go to billionairebelief.com so you can subscribe to the mailing list. When you subscribe, you go get access to a email course on your basically how to keep manage your money better. Cash flow management. Understanding how to make sure that you got you're spending less than you earn, so you can invest the difference wisely. That's what that course is going to be about. It's not up yet. I am working on it as of this recording, but it will be up soon. But still, go ahead and subscribe to the mailing list so you can get access to that. Other than that, that about does it for this video. So I appreciate you once again for tuning in. If you have any questions, feel free to drop in the comment section below or shoot me an email, billionairebelief@gmail.com. This is your host, Dhane Diesil, and I'm out. Peace.